Hello traders, this is Cousin Vinny coming to you again on Sunday, December the 12th with a follow-up with respect to newbies in the room that have been asking about options trades and what I look at. For those of you that have been with us for some time, you've heard this before, so it's really nothing new. We'll use Owens, Illinois as an example because we have traded this over the past week with Johnny. Typically the first thing I look at is with this particular strategy, Johnny brought it up, so I started looking at it. I looked at the 200 EMA, one of the first things I see. Second thing I look at is the tendency for this stock to get oversold and overbought within a short time frame. Okay? With the 100 EMA basically flat, I look to trade the upper and lower Bollinger Bands. Okay. So with that in mind, I'm looking at the 26 level here. I'm looking at not only stochastics, but I'm also looking at a trend where we have oversold stochastics. We move up, we come back down, and we start bouncing off this lower trend line. Okay. So we have 2 points here. This became the third. All right. So I'm starting to look at this with that in mind. Okay, and this upper trend line as a possibility of an upper area for this move. So, okay, oversold stochastics, we get a buy signal. So first thing I start to do is look at this area here, where we have this candle. Okay, I don't know that it won't move down. Obviously, in hindsight, I do, but I don't know that this won't continue to move down. But I'm looking at this trade from a risk-reward aspect. So, from a risk standpoint, I'm looking at the possibility that that could be my stop at the 25 area, a dollar move from this current area. Okay, from a reward standpoint, I'm looking at the upper Bollinger Bands, maybe $2.50 to $3 move. Okay, so a 1 to 3 ratio is what I'd be looking at. I'd probably be a little bit off of this 25. I'd probably look at this level here. Okay, where we came down once before. So the first thing I look at is I go to optionseducation.net/calculator/main_advanced.asp. That's the calculator I typically use. Alright, I input the value at the time, which was $26.80. I then input the strike that I would be looking at, which in this case is the 26. I look at the option value that was trading at around 89 cents at that particular moment in time. Actually, it's using today's figures, but let's go with it. I look at the 26 strike, and I see that my delta, disregarding any other Greeks, is 83 cents. So for a typical $1 move, you could see $83 or 83 cents return on your options. Okay, $2 move, $1.66, and so on. Okay, so I'm looking at my target. My target's at least $2 away. So I'm saying, okay, the risk reward is good. I would like at least $2 to $3 against a $1 move against me. A $1 move against me would hit this delta the exact same 83 cents. So I could lose basically my entire premium. Okay, so typically what I'd do is I'd probably take it off if we hit a 50-cent move on the options. Okay, but I have to use the targets of stop loss areas on the common. So if I haven't confused you already, let's try this one more time. I'm looking at the price of the underlying. It's $26.80. The strike price is 26. I'm looking at the December calls, and I'm looking at interest rate around 2 with a volatility which would fluctuate. You would look at that Greek and change that value. But for now, we're looking at 89 cents on the options. It would cost me the 89 cents times 100, which is each contract worth. You're actually controlling 100 shares of stock, so you multiply it times 100 times the number of options. In this case, it'd be $89 for each option, or 10 options would cost you 89 cents times 10 times 100, which would be $890. Okay? So my loss would be half of that or less, and I'd be out. But my upside could be at least $2.50 to $3. Okay? If I hit my target. So what I'm looking at here now is that move, and obviously in hindsight we get the move. So we would have made $2.50 to $3 or $3,000 on that capital we put forth of $890. Okay? Again, this is Cousin Vinny with a very simple options trade, trading the upper and lower Bollinger Bands with stochastics oversold to overbought and using our targets and risk reward to manage our money. Okay? Take care and come visit us in the daytradingradio.com chat room where we can discuss these types of trades on a daily basis.